there is still an appetite for the United States debt. People are still saying, I'm betting on the United States to pay me back. And as long as people are buying that, that's called the treasury auctions, then we're in pretty good shape.
Do you want a wealthy retirement without worrying about money? Welcome to the Retire in Texas podcast, where you will discover how to enjoy your faith, your family, and your freedom in the state of Texas. And now, here's your host, financial advisor, author, and all-around good Texan, Darryl Lyons.
Hey, this is Darryl Lyons, CEO and co-founder of PAX Financial Group, and you're listening to Retire in Texas. This information is general in nature only. It's not intended to provide specific investment, tax, or legal advice. Visit paxfinancialgroup.com for more information. And thank you for listening. The listenership has gone up exponentially lately, and it's because of you, so thank you. And part of the reason I think a lot of you guys like this show is I don't use a lot of numbers, and that's intentional because I just want you to digest some of these economic and personal financial conversations in a way that's digestible and easy to grab for 15 minutes just to get updated on what's going on in the economy, and some specific things that you can do personally to just improve your financial situation, both now and your future self and the next generation. So thank you for listening, and thank you very much for sharing. So I want to give kind of a market overview this particular podcast. So I like podcasts to be evergreen, meaning that you can listen to a podcast 2 years from now. This one will not be evergreen. In a few months, it won't be worth listening to because it's going to be about what's going on in the economy now. So I'm recording this on March 19th, so it'll be good for a few weeks. So let's talk about the market in general. So we've had a correction in the markets. When I refer to markets, I refer to the stock market. When I refer to the stock market, I'm actually referring to a group of 500 stocks called the S&P 500, the Standard & Poor's 500 largest U.S. stocks in the country. And it went down by 10%. So when you go down 10%, that's called a correction. So we had a correction. It's just know that's different than a bear market. A bear market is 20%, and a correction is 10%. And then there's a third term. A recession is different. That doesn't have anything to do with the stock market. That's when the economy slows 2 consecutive quarters. So correction is one phraseology. Bear market, recession. It seems like we use those interchangeably. They actually have specific definitions. But we're dealing with the correction here. A correction meaning that we've had a 10% drop in the market. They happen all the time historically. So from where I sit, been doing this for a while and in a student, it's not a big deal. But I don't blame you if you're kind of freaking out. That's why I have a job. And I'm here to walk you through that because there's a lot of stuff going on that's kind of scary. And that's why the market goes down 10%. And the thing about this one, though, it's one of the fastest ones. So it happened like really, really fast. So if you look historically, one of the fastest 10% drops in our history. So for what it's worth. But I want to talk about several elements of what's going on in today's economic framework that is leading us to these ups and downs in the market. I have got 7 questions that I get posed to me quite a bit from my peers and people in the community. And so I'm going to answer those 7 questions. So let's start with number 1. What is going on with these tariffs? What are your thoughts? So this is the main reason the market is so volatile right now. The main reason is because we just don't have clarity on the tariff policies. So that's the main thing. I think most people are like, fine, put some tariffs on. I just need to know what it is so I can know where to put my manufacturing plan or how I'm going to distribute my product. So the uncertainty with tariffs, the difference between this administration and the last administration, this is not a political statement. This is real facts. We know that Biden just didn't get up to the microphone very often, especially in the latter part. Very, very, very little transparency. This administration may be overly transparent. And so there's good and bad with that because they're giving us real-time information on these tariffs intraday. And the market obviously is having a hard time with this type of approach. And so part of the market uncertainty is, I don't know how to describe it as a percentage wise, but a big chunk, I'll say that way, the professional way, a big chunk of the market volatility that we're seeing, this not a bear market, not a recession, but this correction we've been experiencing is a a direct result of the policy uncertainty with the tariffs. So once we get past that uncertainty, I think regardless of the outcome, I think we're going to see some stock market stability. And I'm stating the obvious here. Second question, hey, my eggs are up still. What's going on with the inflation? So this is political spin at its best. When somebody says, inflation is slowing, it just means that the growth of inflation is growing less. But inflation still exists. Right now, it is creeping. It is under that 3% number, which is good. But the Federal Reserve, they were on today talking all day. Jerome Powell was. They have two mandates. First mandate is full employment, and the second one is price stability, which is inflation. And so they're targeting inflation at 2%. That's what they figure is good, healthy inflation. There's debate on that. Some people think healthy inflation is closer to 3%. We're at, I think, 2.5, 2.7. Again, sorry to use numbers. I just told you I wasn't going to use numbers, but this is kind of the thing that they're dealing with. The Federal Reserve is saying we want inflation to be lower than it is today. And it's not terribly bad, but here's the problem. It's been compounding. So we had this big run-up a few years ago, and now we're building on that big run-up. This is becoming a problem for a lot of people across our country. Housing is becoming unaffordable. Automobile loans, I just saw the loans. People are still buying cars, but using a lot of debt. Servicing credit cards, health insurance, groceries, it's really, really hurting middle class. I was talking to somebody who's running for mayor of San Antonio just yesterday about this, and it is just hard. I mean, if you're in middle class, it's hard. And by the way, you're not alone. It's everyone. And so this inflation, it's the idea of it reversing itself, calling deflation. I don't think that's on the table. So we're just compounding the damage that was done years before. But, we are getting to a place where it's normal. It's just, you just don't go backwards. You just don't, all of a sudden, eggs don't just go back to where they were years ago. So that's where we're at, is the Federal Reserve may cut rates. They're projected to cut rates twice this year. So if you're curious about the Federal Reserve cutting rates, and they would cut rates. They'd probably cut rates if they see some, and I think this will probably be the way they look at this, if they see that unemployment is creeping up. So I would imagine that'll be kind of how they play that out. Okay, third, you may not be asking this question, but you should. Is the government going to shut down anytime soon? So governments shut down when there's a budget, and that budget is not... let me say it this way. Government shut down when we don't have a budget. And so when we don't have a budget, sometimes they do something called a continuing resolution. That means it's not like a real budget yet. So it's typically a short-term spending bill, and that's what we're dealing with now, a short-term spending bill until September. And we've kind of gotten used to this. I don't know if you remember a few years ago, 5 or 6 years ago, we had this big pause in government shutdowns over budgets. And I'll never forget, it was really headlines and nervousness. The market went down a lot. And now we've had these potential government shutdowns periodically, and we're like, that's normal. And so now if you look back, LPL did this research and said, if you go back from 1976 to 2013, government shutdowns really don't make a difference when it comes to the stock market. So just so you know, if you start seeing that coming September, government shutdown, if you start seeing that because some guy in the New York Times wants to have a headline, just know that historically it doesn't have a material impact on the markets. Okay, fourth one, Doge. Let's talk Doge for a second. I think I like Doge. I don't know if I like Doge. So what is Doge? So the Department of Government Efficiency, not a real department, quasi-department. Put it in ChatGPT and see what ChatGPT says about it. It's kind of interesting. But here's the thing, all of us work really, really hard for every single dollar. And when we see, and we all know that the government's been wasting money, but we didn't realize to what degree. I mean, it is insane. The federal employee retirements. So if you retire as a federal employee, they process the retirement by paper, using hand in this old limestone mine in Pennsylvania, 230 feet underground. The Files are stored in manila envelopes, put in cardboard boxes. It takes months to get it. I mean, it is absolutely insane. So obviously, a lot of people hate Elon Musk, but he is doing a heck of a job. A lot of the surveys are interesting. They hate Elon Musk, but they actually like the government cuts. That's the surveys. I don't know which ones. Probably, I think that was NBC. Doesn't matter. I think that generally speaking, people are pretty for finding ways to cut. I think the debates have been, they could do it better. They started to use like a sledgehammer or a chainsaw, all this stuff. I think the reality is no one's ever done it before. So finally somebody's doing it. Like FEMA, the Federal Emergency Management Agency, they gave $59 million to house illegal immigrants in luxury New York City hotels. Like, what is going on? Or $40 million USAID's, the $40 billion budget, and they gave money in Iraq to Sesame Street. Like, and by the way, this is just like a little sample of the nonsense. And so, yes, could it be better? Yes. Could we criticize it? The reality is we had to do this, guys. This was not an option. Anybody that has done a budget for a business or an enterprise knows that you've got to make these difficult decisions, and everyone around you is going to complain that you're not doing it right. I promise you, but it has to be done. And so I'm thankful. If we get to $1 trillion, that would be amazing. Last time I heard it was at $700 billion. But Doge is very important for us to be able to pay our bills for this generation and the next. Speaking of bills, number 5, what's the latest on the taxes? So in 2017, Trump passed this tax bill, and it expires at the end of the year. And so they'll probably extend it maybe for 5 or 6 years, and they have to negotiate some stuff like the taxes on tips and the automobile loan interest deduction. We're early in the steps of conversation. There's a lot of steps here. The corporate tax rate, I didn't know this, but I probably read it, but I didn't realize it, that they lowered the corporate tax rate to 21% to be competitive with the other G7 countries. And that's permanent. So even though it's in the tax bill, it's a permanent. So that one doesn't need to get I guess you could kind of cuss and fuss and try to negotiate that, but you've got to figure out a way to get businesses here, to get businesses to stay here, to make jobs here. So that'll probably be sticky. And you get a better standard deduction, which is really cool. The estate tax will be interesting. So, pay attention to the estate tax. Those that have estates, you know who you are, and you need to start planning accordingly. So we need to pay attention to that, especially as financial advisors for our clients. So we'll be watching that, but it'll be probably extended. I'm guessing 5 or 6 years. Next question, 6. Will they raise the debt ceiling? Good question. So they're probably going to have to, right? Otherwise, what are we going to just default? So the debt ceiling is a legislative limit on the amount of national debt that can be incurred by the U.S. Treasury. It's a credit limit, right? A self-imposed credit limit. When I was early in my career and I was just struggling financially, to find clients, because the only people I knew were in trailer parks and college kids. So I didn't know anybody with money. So I had our newborn at the time, and my wife, we were married, and we didn't have money for the mortgage. So the Visa sent me these checks called not cashier's checks. What do they call them? Yeah, they're cashier's checks, cash advance checks. So I was like, man, I don't have money for my mortgage. So I wrote a cash advance check, put it in my bank account, and had money for my mortgage. You can't do that forever. The government has been doing that forever. They've been printing their own money, and they just continue to say, I'm going to add more and more debt. By the way, I just want you to know I don't do that anymore, of course, but I was just survival mode, different podcast. But the government certainly has been racking up debt. We all know this. And the idea of this debt ceiling is to create some restraints, but then they always lift it up. Put this restraint, lift it. Put this restraint, lift it. Here's the main thing I want you to know. There is still an appetite for the United States debt. People are still saying, I'm betting on the United States to pay me back. And as long as people are buying that's called the treasury auctions, then we're in pretty good shape. That's like saying that, when I was struggling, that Visa or MasterCard, American Express kept saying, you know what, I think Darryl's going to be good at financial services. I'm going to keep lending him money because I just really believe he's good. At a certain point, they say that's too much money, or I'm nervous about Darryl being able to make money. Sooner or later, the Treasury auctions look at the United States and say, now I'm nervous about whether or not you can pay me back. I've talked with people that know more about this than I do because it's a very complex mechanism, but the Treasury auction is healthy and people are still very willing, very, very, very willing to lend the United States money, but we still have to reduce that debt. When you can only reduce the debt by cutting spending, making more money, paying down debt. But by the way, the cutting spending is certainly being done by DOGE, but you're going to have to do something about Medicare and Social Security, and that's a political challenge because, you heard the phrase, I think you might have heard Elon Musk say it's a Ponzi scheme. And a Ponzi scheme is basically when you don't have enough money to pay out to others, and so you go find a new investor. And that's pretty much what Social Security will be, I think, in 2034. In other words, there won't be enough money coming in, so they'll have to get new investors. So it really kind of will be officially a Ponzi scheme in about 2034. So he's not far off from that. And so you'll definitely have to make some adjustments. For those that are listening that are getting Social Security or Medicare right now, I don't think it'll be cut for you guys, but I think the next generation, it'll have to be adjusted. It's just not sustainable. And that's the biggest thing that we've got in terms of expenses. So number 7, as I wrap this up, what do I do now? So, we want to know what's going to happen in the future. We want to read the tea leaves. Tea leaves are when fortune tellers would read the patterns of the leaves at the bottom of the cups. And, we don't do that anymore. You can't even see at the bottom of a Bill Miller cup. But what we can do is kind of just look at, what's going on around us. Businesses are still hiring, so that's good. And teenagers are still buying at Sephora, so that's good. They have the National Federation of Independent Business Owners Optimism Index. That's kind of going down. Consumer sentiment's going down. CEO confidence is going down. But it's not extreme, and it will go down in the midst of uncertainty, and that's what we have right now. A lot of fog in the market, namely with the tariffs. And so once we get through that, hopefully we have some stability. But just know, I think if you're anything like me, you've planned for this. Like you looked at your financial plan and said, I can weather ups and downs. The last thing I want you to do is be emotional in all this. If you have money that you want to invest, you could dollar cost average and maybe put a chunk in, but not all of it, and then put some each month. The one thing I want to make sure you don't do is have your emotions get commingled with your money. It's like orange juice and toothpaste. It just doesn't work. Right now, there's a lot of people making emotional decisions. I saw a report on 401ks, and people are doing a lot of trading, and they're trading out of stocks and into cash. Foolishness to me. So I don't want you to do that. I just want you to hang in there, stay diversified. You'd be surprised. The international parts of your portfolio and the bonds are probably holding up pretty okay. So just don't mess with it. Stay diversified, long-term focus. Pay attention a little bit, but not too much, because I don't want you to get worried. And then check with people that are kind of, a financial advisor, somebody that can walk alongside of you. This is always a challenging time. There's always uncertainty. But if you think long-term, you will be rewarded. I'm confident in that. Obviously, I can't guarantee that, but based on historical evidence, we'll weather through this. So thank you again for listening today, and I hope you have a wonderful day. And remember, you think different when you think long-term.